volatility of the stock market has many of us worried. How can you tell if your investments are safe? It's a Money Monday. Fox 2's Murray Feldman is on the case to answer your questions about the ups and downs of Wall Street.
And Murray Feldman joins us again this morning. Murray, you're going to tell me what stocks to invest in, is that right?
Yeah, we're going to tell you what stocks to invest in. The ones that are going to go up the most, Alan. Now, you see, he didn't ask me how to pick them. We just tell him which ones to invest in. Anyway, there is plenty to talk about on this Money Monday. Thousands of public school employees now faced with early retirement decisions and, of course, your investments. The stock market has become volatile again. That's where we start. George Wells is here from his financial firm, Legacy of America. And, George, as we start with the stock market, what's up with the market? We got so used to seeing it go up and up and up, and then suddenly it has tanked many days in a row.
Well, let's not let our memory get short. So used to, it's only been over the last year that it's been going up.
Right.
And with this computer glitch or whatever you want to call it, it really highlights what may be going on behind the scenes where we may see some significant volatility in the future here.
All right, when you talk about that computer glitch, the video was unbelievable when we had it here on Fox 2 as it was happening. Take a look at how fast that stock market was dropping there 2 weeks ago. Is our money safe? How can we make sure it's safe? Even though this was a glitch, how do we know that we're going to be safe and our 401ks are going to be all right?
Well, I think we know with certainty that when you're invested in the stock market that it's not safe. Long term, you expect things to be more positive than what they are negative, but today is a time more than ever where you need to be looking at, there's really two schools of thought here, Murray. One is you can either say, what are the parameters that I'm willing to accept for volatility? And the other school of thought is, I'm just going to let it ride. I'm going to be patient. I'm going to expect that the market over the long term is going to correct itself and be more positive than what it is negative. But careful planning is protecting yourself because it's very important, especially when you're saving for retirement. You cannot protect what you do not control. And as seen how quickly things can go down in the stock market, you can really have a disaster on your hands very quickly.
All right, so how much should we legitimately expect to make in a given year in the stock market? Forget the ups and downs today and what's going to happen tomorrow, but over a year's period, what should we expect to really earn?
Well, traditionally, we've expected to earn between 7 and 10%. The difference is today there's a lot of options. There's programs that you can put your retirement assets in that guarantee a 7 or 8% rate of return, so you do not have to take the risk yourself. Another company is taking the risk to guarantee that you're going to get a minimum of 7 or 8% rate of return on your money for retirement.
Real quickly, what are some of those products?
Well, one example is a fixed indexed annuity, but you have to be so careful, Murray, because when you buy an annuity or you utilize an annuity, you have to be so careful. It's like taking prescription drugs. You want to make sure that the prescription fits the need so you're able to get the results that you expect, because we've heard the horror stories of people utilizing the wrong types of annuities and it just being a total disaster for them in their retirement plan.
So you have to read the fine print and know exactly what you're buying and actually have somebody who helps you steer through those decisions that you make, somebody who is a professional in that field. I want to also mention that the legislature, of course, has passed school reform measure. We had it on the air throughout last week, especially Friday. Tens of thousands of school employees now faced with a decision. Should they take early retirement? What should they be thinking as they wake up on this Monday morning about what's going on?
Real simple. This is a business decision. You want to lay out what your options are. If you are able to take the option, take the pension, what other assets you have to be able to supplement your income so that you're able to retire happily ever after. And then once you've laid it all out from a business decision standpoint, then trust your gut.
All right, these are the things that we think about here. How much do you have? What are your assets? So that means you have to take an inventory of everything you own, correct?
That's right.
Can you supplement retirement? It used to be that your pension and Social Security would take care of everything, but now we have to have something else on the side.
Today, people are living much longer in retirement, and with inflation potentially looming, you need to be able to have significant other assets so that you're able to retire happily ever after to supplement your income. Or decide, well, you know what, I'm going to be able to live within these parameters.
All right, George Wells, Legacy of America, Auburn Hills. We have a link to his company at myfoxdetroit.com. Plenty of free information on there for you to get about these topics and others. Thank you, George, for being with us on this Money Monday this morning.
Thank you, Mark.
I'll see you tonight, Fox 2 News, beginning at 5 with Money Works and the Job Shop, because we are always working for you, as is Cam Carmen. Cam?
All right, thanks, Murray.